What we bring to the table is we bring balance sheets, we bring experience, we bring property management, we can sponsor a loan, we can recruit capital for a deal, we bring mentorship, we bring all that stuff. And what we're basically looking for is more deal flow, more joint venture partners to do deals with. That's it.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, what's going on? Welcome back to Accelerated Investor. If you're new to us, welcome to your first podcast and first training. If you've been around for a while, thank you. Thank you so much for sharing this on social media and engaging with us and asking questions and leaving comments, ratings, and reviews. I just am trying to deliver to you as much possible content and value as I can. One, because coaching is in my DNA. It's in my blood to help others. And two, I love to this is therapeutic for me to kind of get this information out and teach and talk about the deals that I'm doing, the relationships that I have. And number three, it helps build a larger ecosystem for all of us to do more deals, refer deals, buy deals, invest in deals. It's just really an amazing platform. Accelerated Investors become an amazing platform for us to basically find more deals, find more capital, more mentor students, more relationships, have guests on the podcast. It's just been phenomenal. By the way, if you haven't yet jumped into our private Facebook group, go into Facebook and look up Accelerated Investor and make sure you make a request to become one of our members. We share a ton of content inside of that Facebook group. It's amazing. So we'd love to have you as part of the team. Go ahead and check that out. Now, in today's podcast and in today's training, what I want to talk to you about is a massive apartment deal that we just closed. This is called Vista Mock. And Vista Mock is a 492 units. It's a massive, massive deal that we just took down and bought with our partners. So let me tell you a little bit more about the deal. So this deal is in Albany, Georgia. Albany is in between Atlanta and Tallahassee, Florida. This complex is in an A-B market. So it's actually two separate complexes that are about 30 minutes from each other. And the complexes were owned by the same seller. So the seller wanted to sell both complexes together. One is definitely an A-class property, and the other one's kind of a B- property. You mix them all together, and it's an amazing opportunity. These are garden-style apartments. They're already 90% occupied. However, we found that the seller wanted to sell them, and even though they're 90% occupied, we found out that none of the grounds, none of the driveways, the parking lots, none of them have been paved in years. None of the landscaping has been updated in years. All the pools at one of the properties, at the Vista property, there's 7 sort of complexes and 21 buildings. So these buildings are in groups of 3, so 7 groups of 3. And inside that group of 3, there's a pool. Well, none of the pools had been opened. So imagine living in the deep south where it's hot, humid in the summer, and having a pool that you walk past every day and not having your pool opened, right? And the units inside hadn't been updated. So tremendous opportunity to update the grounds, update the exteriors, update the interiors, increase the rents, and bump up the value on a significant basis. Now, the mock property, which is more in a B- area, even though the rents are a little bit lower and it's a little bit more working class area, again, same opportunity. deferred maintenance, the interiors, exteriors hadn't been updated in years. And so because we've already closed, we closed a 730 unit in Albany, Georgia. We closed a 407 unit down by Albany, Georgia, and Warner Robins, Georgia. We closed another 200 unit down by Albany, Georgia. And because we had closed deal after deal after deal after deal, what happened is one of the commercial brokers, commercial agents, saw that this deal was going to come online, and they brought it to us before they brought it to anybody else or before they put it on the market. Now, if you know anything about commercial real estate, you know that brokers love to do pocket listings. They love to not put the property on the MLS or CoStar or LoopNet. They love to keep properties as a pocket listing, and they like to double end the commission. They like to get both commissions. So this agent knew that we had already owned about 15 to 1,800 units in this area, that we had bought these other massive portfolios, and so they brought this deal to us. And of course, we're like, yep, we want it. We'll buy it. And so we did. And so what we did was we structured a partnership between myself and my good friend Tim Bratz and our operating partners down in Albany, which is Brian and Walter. And we were able to structure the deal where we're all into it for $21.7 million. Purchase price is $20 million. We're going to improve mostly the exteriors and then some of the interiors for about $1.2 million. And so we're going to be all in for about $21.7, $21.8 million. And also, if you're catching this on YouTube, you see me, I'm looking over at my other screen to make sure I've got all the numbers right. So what we did was we actually presented this deal, the purchase contract, to a lender, and the lender said, look, these buildings are already super stable. So we can go right into permanent financing, agency financing, non-recourse, right? Non-recourse meaning we're not personally signing for it. We're not personally guaranteeing it. Non-recourse for $17 million. All right, so we're able to secure a loan for $17 million. We need $21.5 million. So me and my business partners, Tim Bratz and Glenn, we get busy recruiting capital and raising the money for it. We go to everybody that we already have existing relationships with, and we put together a 506B securities exemption. And we already have tons of relationships with people who want to invest with us and people who have invested in our deals in the past. We hold a webinar, and boom, within 2-3 days, we raised $4.5 million for the down payment and the equity. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. When we look at this particular deal, what happened is that the net operating income, after it's stabilized, is going to go way up, okay? And that's going to increase the value. You know that through apartments and commercial deals, everything is based off of net operating income. How much income does the building generate? So in this case, this building's going to, once it's stabilized, we increase the rent, stabilize everything, and finish off with the last 5 or 8% of occupancy. It's going to generate almost $2.3 million of net operating income. And then if you multiply that times about a 6 cap, right? It's actually, you divide by 0.06. All right. So if you're listening to this and you want to grab your calculator, do that. Take 2.283 million and divide by 0.06 or 0.065. That's based on a cap rate. The cap rate is basically a rate of return. When banks evaluate commercial buildings and they appraise them based off of a certain return on investment. So if you're going to get a 6 or a 6.5 or a 7% return on investment, that's also known as a cap rate. So the bank basically assigns a cap rate to the deal and says, hey, this area, this building, this subdivision, this market gets, for this kind of Class A or Class B apartment, is going to get about a 6.5 cap. And they have data from all over the country, and the commercial lenders tell us what the cap rate is. Okay, we don't just make up an arbitrary cap rate, they tell us. So based on $2.283 million, that puts the value of the buildings at $35 million. So we're all in for $21.5 million, and the future value is $35 million bucks, right? Huge opportunity. So now the question becomes, well, like what's the exit strategy? What's the plan with investors? How is it structured? Well, because we already got $17 million of permanent financing, 30-year amortization, 12-year balloon, and we have that first piece of financing already in the deal at $17 million, what we want to do is structure it where we can get all the investors, the equity investors, we want to get their principal back out of the deal. Okay, we don't want to sit on it for 5, 7, 10 years. That's a traditional syndication where equity investors are in the deal for a long time. They're what's known as a limited partner. The limited partners, their equity, their capital, their principal is stuck in that deal for a long, long time. What we want to do is refinance the deal and pull all those investors back out of the deal, give them all their principal back plus their preferred return, and then leave them in the deal in perpetuity with no money in the deal. Okay? So in this particular deal, because we already had a permanent loan on it with Fannie Mae at $17 million, we've already had an agreement with the commercial lender that we can just add a $7 million supplemental loan, or essentially a second mortgage. And when the building is stabilized, or $35 million, they're going to look at basically a 70% total loan to value. So again, if you multiply 35 million times 0.7, you're going to see that we can put about 25 million of total debt on the property. We've already got 17 million, so now we're just going to add a supplemental loan or a second mortgage loan for another 7 million. Okay? That 7 million now allows us to pull all the equity investors back out of the deal, give them all their principal back, and produces about $3 to $4 million of cash out refi proceeds. That $3 to $5 million of cash out refi proceeds is non-taxable loan proceeds. So now all the equity investors, me, the other general partners, Tim, Walter, Brian, plus all the limited partners that all own a piece of this deal, everybody's going to get a piece of the cash out refi proceeds, which is an amazing windfall of money. $3, $4, $5 million cash out, and it's tax-free loan proceeds, right? Amazing, amazing deal structure. So the same lender has already told us, hey, we're all in for $17 million, based on if you guys get to the pro forma and you get to the $2.283 million of net operating income, the property is going to be worth $35 million bucks, and we'll do a supplemental loan for $7 million. That's going to provide about $2.8 million of cash out refi proceeds. Now, the beautiful thing about this is now our investors, our passive investors, will have all their principal back, and then they're going to maintain equity ownership in the deal in perpetuity with no money in it, which means they get to participate in appreciation, depreciation, principal pay down. They get if we're doing any kind of cost segregation, and they get to write that off on their taxes. All these different things are amazing opportunities, and they have no more money left in the deal. Okay? Now, for me and my friends and my partners in this transaction, it gives us a tremendous amount of passive cash flow. It gives us huge tax advantages. Also leaves us with about $10 million of profits or equity in the deal. It builds our balance sheet, makes us more bankable, and our long-term plan is building legacy wealth. So 10 years from now, right, the new loan that we have on, it's going to be $24 million, but we're going to start paying that down. So 10 years from now, that $24 million is going to look more like $20 million. So we're going to owe $20 million in about 10 years, and it's going to be worth $35 million, right? Then 10 years later, we're only going to owe $10 million, and the building's going to be worth $35 million. And then after 30 years, the building's paid off, and it's worth $35 million plus. It's a true, massive, long-term legacy wealth builder. So now, how can you participate in deals like these? Well, we're always looking for operators. We're looking for people to bring us deals. We're looking for brokers to bring us deals. We're looking for Class A and Class B properties. We're typically looking for properties that are $2 to $2.5 million or more, properties that are at least 50 to 80 doors or more, properties that are value add, that have either bad management, that have deferred maintenance, that have low rents that we can improve. What we bring to the table is we bring balance sheets, we bring experience, we bring property management, we can sponsor a loan, we can recruit capital for a deal, we bring mentorship, we bring all that stuff. And what we're basically looking for is more deal flow, more joint venture partners to do deals with. That's it. This is a super exciting deal. And after we closed on the Vista Mock complexes, this takes our total apartment portfolio now up to 2,208 units, which is just really, really exciting stuff. And we've been able to accumulate those in the last 10 months. So we've been able to build our balance sheets and our equity and our cash flow all in less than 1 year. If you have any comments, questions, if you want to joint venture with us, bring us deals, partner with us on a future deal, just reach out to us. We'll put the contact information in the show notes, and we look forward to doing more deals with you in the future. All right? Thanks so much for being here. We'd love to JV with you on a future deal.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities to start your journey toward the lifestyle you've always dreamed of. Apply for coaching at joshcantwellcoaching.com.